Good afternoon, this is Clark Neighbors with B.I.S. Commodities with the weekly summary for August 3rd, 2012. Very interesting week as we've been through several weeks now of 7 or 8 weeks of some pretty amazing markets. Historical drought of 2012 may go down in the history books as one of the most interesting years we've seen, dating back to the 88 market. Possibly the 93, 83, and years prior to that was not a lot of history on. For the week, interestingly enough, East corn up 14 cents, December wheat up 7 cents, November beans up 27 cents, cattle basically $1 higher, hogs $5 higher, crude up $1, and stock market, for what it's worth, at highest levels we've seen since the month of May. The one thing we would look at in these markets, and to some degree in the crops and discussion of crop conditions and all that, anywhere in the Midwest you talk right now, the conditions of the crops, the only thing that's consistent of the conversation is the inconsistency of the crop. And that seems to be a talking point no matter if you're talking in Illinois, Iowa, Nebraska, or where you're talking. That is key. Weather continues to be a major highlight in the market on a day-to-day basis. Obviously, the weather forecast continues to be pretty much the same as we have been this last several weeks with very little rain. So in some ways, I think the weather is becoming a little more of a stale news item on a day-to-day basis. We are entering a time frame now, though, where rains could be or need to be beneficial for the bean crop. So that's a key thing to watch over the next week and a half, is weather may be more of a play on the soybean contract than it is possibly on the corn. And corn has been the main leader up to this point via the weather. Also, interestingly enough, in the corn, looking back over the last 14 trading days since roughly the middle of July, the corn market's kind of stabilized itself to some degree in a trading range of December corn between about 775 and 820. What may be occurring right there is, again, is this stale news as far as weather's concerned. So we have a market right now that until you have more information on the size of this crop, i.e. smaller, it's hard to break through this 820 area. At the same time, because of the condition of the crop and the weekly conditions getting worse on a week-to-week basis, it may be hard to break through that 775 area, so we're kind of in a little bit of a trading range right now. And the biggest factor there, above and beyond supply, we may be to a point, i.e. $8 corn, where demand is starting to show signs of really shutting off. The point being is, we really won't know how much demand to cut until we have a better feel of what this crop size is. Keep in mind, and I'll talk about this in a little bit, in next Friday, a week from today, the USDA will come out with the August production and supply and demand estimate. We'll talk a little more on that in a bit. The other thing that was a little more of a factor this week in the market we haven't seen since we've been in this weather cocoon, we did trade a little more via the dollar and some of the macros. There's plenty of news out this week from the EU in regards to trying to stabilize their austerity program and talking about interest rates, and left them unchanged. The same with the Fed this week here in the U.S., keeping interest rates unchanged. No stimulus package has been put together at this point, but the Fed is also hinting that if you show more signs of weakness in the economy, they may use that as a tool to try to help stimulate the economy. Employment numbers out today were a little stronger than what the market was looking for, thus we're seeing a little bit of bid in the stock market today. Again, highest levels we've seen since May. And also because of that, crude market a little firmer today also, maybe because of the thought of increased demand because of a little more stabilized economy. We'll see. When you look at that from a world basis, there's still a lot of problems out there, and that bears watching. Again, the upcoming events this week, Friday the 10th, be the crop report, supply and demand report, and we're starting to see a potpourri of yield ideas starting to filter through the market, with two major sources earlier this week talking about a 124 corn yield, a 131 corn yield, the upper 30s on the beans. We're going to see numbers all over the place. There have been some estimates down in below 120 bushels on corn. So it's really hard to get a good feel of where this yield's going to be. One other key ingredient to keep in mind when you're talking on production or raw production is not only yield, but where the harvested acreage number will come out. There's a very good chance you could see a 2, 3, 4, 5 million acreage decrease in harvested acres because of extra silage and abandonment, which in turn, theoretically, should help improve the yield, but raw numbers would state that's not the case. If I had to guess right now, the market is trading a corn crop of something over 11 billion. Is it 11? Is it 11 and a half? But I think that's the number we're factoring in right now from a demand sector at $8 corn, where we have to ration. If the market has to go higher to ration more demand at some point, i.e. we have a crop size or thoughts of crop size of 10 billion, 10.5 billion, something like that. I don't think we factor that number into the demand sector at this point. A few key swing factors to continue to watch. One, weather. We can talk weather on a week-to-week basis. Again, it's becoming kind of a stale news item in the corn, but it could be very key in the soybeans in the next couple of weeks. The tricky thing about beans, you don't know what kind of yield you have until you get to the field, but I think there seems to be reports coming out of the country. There's tremendous concerns on the beans if we don't start seeing some rains as a general item in the Midwest over the next week to 10 days. Crop tours will continue to be a talking point of who sees what, where, when, and how. There's going to be a lot of debate on both corn and soybean yields as we go along. And demand rationing. Livestock sector, the ethanol situation, lots of talk, pressure in D.C. with the mandate and so on. Most of the people we talk to that we respect do not feel you're going to see any major changes in the mandate until post-election, if not later. Keep in mind, the ethanol industry as a business model will cut when they need to cut, mandate or no mandate. So the market should take care of itself on its own as a general rule. One thing to keep in mind from a producer perspective, depending on where this crop ends up, we don't know the answer to that at this point. Also, we don't know how much demand rationing we need to do, but keep in mind, October is the month where insurance price is established. If you want to protect some of the downside of this market, we would look at some puts in the corn and or the soybeans, just to protect the downside in case something major comes across from a demand sector change. That could be very key in your marketing over the next several weeks. Outside, on the livestock sector, for the week, both hogs and cattle a little lower on futures. Cash cattle, though, traded $3 to $4 higher this week. There was a fairly wide basis in the cattle market, i.e. cash market, $5 or $6 below the futures market a week ago. There was fear of delivery. It looks like the cash market wanted to take away some of that talk of delivery, so we saw a stronger cash trade this week. Boxes did show some stability. Feeder cattle, for the first time during this rally in the corn market, did not seem to follow the corn market with quite as much reverse correlation, if you will, i.e. higher corn, lower feeder cattle market. That also seems to have stabilized itself somewhat like the corn, but not following that opposite direction like we have seen. Pressure in the hogs this week, as we've had a pretty good rally in the hogs due to the thought of 6, 8, 9, 12 months down the road seeing better hog levels because of the cutback in breeding herd and production right now, and building that supply short term, but tightening that supply as we get down the road, mainly because of these high price feed. we are going to see some real interesting things happen this year as far as what types of product substitutes we see go into rations, whether it's wheat, other protein items, buying feed grains from different parts of the country, maybe even different parts of the world. We have seen already some corn imported into the eastern seaboard, into the southeast for the livestock sector. So keep in mind there's going to be some very changing type things going on in the next 12 months to make everything work. As a whole, in a nutshell, the market still seems to have very good support. As long as the crop conditions get lower, as long as the thought of the yield continues to diminish, it's hard to break this market. The easy part of the rally is probably behind us, but the upside of this market still is there from a vulnerability standpoint as a end user or feeder, ethanol plant. At the same point, as a crop producer, keep in mind with this type of rally, we see some demand rationing. Things could change rather quickly. If anybody has any questions, feel free to give us a call here at the office of B.I.S. Commodities. Phone number is 800-373-2525. Feel free to give us a call at any time. And with that, have a great weekend.